Good afternoon, everybody. This is Mark. We're back here for the daily recap. It is Tuesday, so this is the first Tuesday, I guess in 18 Tuesdays, that we did not close green for the day. Historical, whatever you want to call it, it is what it is. We were down a chunk today, almost 100, I think 150, 180 in the market overall. Came back pretty, to down 30. I think we closed around down 50. Some damage is done. It definitely feels weird, A lot of times it's a little foretelling when you get a lot of big volatility. The last few weeks, last week and a half, we basically had up 100, down 100, just switch off every single day. That to me tells me there's a lot of indecision going on, enough trading volatility, which is good, but from a decision-making process, putting on swings, putting on new positions, putting on things you're going to hold for longer than a day and a half, or more than a trade, might be a little risky. Do I think we still stay up? I feel like we do, but this market is telling me, there's some warning signs ahead that something may be in the cards for us to have a little bit of a down move that I actually believe is quite healthy if it actually happens. But we'll have to wait and see. I mean, it is the summer months. We really don't have earnings in front of us. I wouldn't be surprised to see it happen. But at the same time, as I've been saying consistently, if the banks hold up there, and we have different industry groups keep taking the reins and the baton keeps getting passed, I don't know if it's going to happen how everybody wants to do it. And the question becomes, everybody's been saying 3 to 5% pullback. Everybody's going to be buying, in droves. What normally happens is 3 to 5%, and we usually go 7%. So we'll have to wait and see if that's in the cards. Obviously, we know what Japan has done in the last few days. We rallied today, or at least, early in the day. But it was up 50%, so it's up almost 3 times as much as we are up this year. So not quite, we're not getting affected by it, but overall, definitely some damage is getting done to some of the key stocks that we've been watching. You can go to the banks, as I've been saying, they're hanging up there. They're hanging up there like champs. You have Goldman Sachs, JP Morgan, no damage at all. They're not even barely penetrating their 10-day moving average, which is key. They're in good, 3-week trend lines. And overall, obviously, they're in uptrends, Citigroup across the board. High beta, it's hit or miss. Apple, we know, cannot really get going. You have 2 patterns really trying to show its face. A little bit of an ascending channel and a little bit of a bull flag. Personally, I think eventually it's probably going to work itself to the upside. But we'll have to wait and see. I don't think you need to be too aggressive with it in this process. We know it's failed a few times at 450. 455, and then I think above the 464, you're going to see the 500 mark very quickly, and that's going to be the real trade for us to really take advantage of. But it's getting tight, and a few more days of this tightness, it's probably going to give us some resolution which way to go. Then you have Google, which I think it's the kiss of death when somebody puts a $1,000 target on it. It's coming down. Maybe it comes down to its 50-day moving average, 835. Might be viable before that point, but let the market sort of dictate and tell you what's going to happen. Netflix, I'm actually long a little bit overnight. I know it's added to the NASDAQ 100. Looks pretty good, though. Above 220, 230, I would say. Could move back to 240. So it's still one of the high beta stocks that actually is hanging in there pretty nicely across the board. Biotechs, hit or miss again. We had that CLVS yesterday, and obviously rallied nicely today from a down 11 to almost green. Interesting, lots of basing, might be valid over the next few days. But then you have the BIBs of the world, Celgene's, ALXN, Amgen, certainly. Some big biotechs that quite frankly have gotten hit. War leadership, waning a little bit. We'll have to wait and see what happens there. The same with the home builders. The home builders really have not been in play for a little while. They've touched highs, early May. And they've sold off considerably. Some of them are even touching their 200-day moving averages. And you can just see, as I start, flipping through, this is Len. It's right at its 200-day. Ryland still has a ways to go till its 200-day. But they are coming off a little bit from the highs. And so I think it's just a yellow light to be aware. Is there going to be a buying opportunity at some point in time? Certainly. It's just a matter of waiting for the key setups. I said it this morning. There's times I get into this market and get involved every single day and look at my charts, and I see lots of trades I want to get involved with that day. Then there's other times I get them, like we're at right now, where quite frankly I see some B and C trades, but they're on smaller time frames. The daily charts don't look as healthy to me. They don't look as juicy, at least from the long side, possibly from the short side. You can take advantage of it. And that just goes to show when you're a trader, you get to pick and choose what you want to do. I think we're in that mode where it's a hands-off policy is a little bit better, being a lot more selective, versus the first part of the year, you could have closed your eyes and basically made money just buying anything. I think we're getting a little bit trickier, and I think you just really have to pick your prices a lot better and a lot more strategically at this level and at this juncture. No, we just had a tremendous, this year alone, we had a nice 6-month rally that has taken place. So overall, guys, I'm not totally bearish, certainly not totally bullish. I think the yellow light has to be on. If the banks stay up here, I don't think we fail. I think high beta takes turns and continues to take turns. Amazon, I didn't mention it, but it's hanging in there. Nothing great, but 260 seems to be viable. 272-ish is probably, is the lower end of the range. 272 is the top end of the range. And so it's range bound, and that's how I'm looking at most of these stocks. They become range bound, and you got to look at smaller time frames in order to really take advantage and capitalize on what's in front of you. Other things, I know people love the high beta. Tesla, it's hanging in there. We were talking about the A+ trade would have been a gap down this morning. It didn't do it. Up $2. It's still going to probably just base around here for a few more days. We'll see if it can, get back to its 21-day, and if not, maybe it gets back to the, above its 8-day, which is that right now. So that was the high for the day. We'll have to wait and see. But then you have some other highly shorted stocks. Soda hit new highs, took a break a little bit. Some of the solar stocks are actually taking a little bit of a break, 3-4 days down. That to me, if they're really going to hold up, 3-4 days down in some of these stocks, is where you look to buy buying opportunities into key moving averages if this market's going to hold up. But I still believe you have to be a lot more strategic than just blindly buying pullbacks in the best in breed. Because quite frankly, we haven't had that sell-off where they go through these key moving averages with authority, with volume, and they don't come back the way everybody wants it to. So my opinion and my advice is to put a little caution into this tape, be a lot more selective, and try to really take advantage of what's in front of you on a daily basis, and do less. If you're not seeing it, it's okay to take a step back and wait for an opportunity, because quite frankly, as the volatility starts increasing throughout the day, you do get opportunities that do come slap you across the face, and they make a whole lot of sense. So hopefully you were able to take advantage of today, or mitigate at least from the downside if you've been long consistently over the last few months. And I personally have taken a lot off, almost all off in the swing, almost all off in the day trade, coming in pretty much with a blank slate and waiting for my opportunities. I will see you all tomorrow. Have a good night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.